Happy 4th of July, everybody. As I hear the fireworks outside, I want to share with you some personal stuff. I had some time to think over this holiday weekend, not weekend, there's a holiday, July 4th, and I want to go back to my roots, what I've done before, okay? And I'm going to show you how Market Chameleon comes into play with all of this. I had a chance, I had some time off, so I looked into my Finance After 40 channel, the YouTube channel, and I saw my first couple of videos posted like 3 years ago. I had fun. I remember, I don't know if you guys, the guys that, or girls, whoever followed me back then, we did like stock analysis based on the Intelligent Investor book, the Benjamin Graham. We did some ratio, we did some financial statement, and we found the fair value of stocks of Tesla, AMD, Nvidia, Apple, and tons of other. I've done like 20, 30 of those. And then I chase subscribers and I chase views and clickbait and all that, and just I stopped having fun. I want to go back to that. I'm gonna go back to that, and we're starting next week. We're gonna do two things because what I've done 3 years ago, we did, yes, we've done the analysis, but once we found the fair value of a stock, we stopped. We didn't know what to do. Now, fast forward for today, I have Market Chameleon, which is the second piece of this puzzle. So what my plan is, now that I will find the fair value of a stock based on the intelligent investor ratio in the book, and by the way, I bought that book again this morning, just ordered from Amazon, will be here in like in 2 days, it says, basically, even though I'm a Prime member. But I read that book, I don't know, like 8 to 10 years ago. I need to refresh. It's like 600 pages, something like that. However, we're gonna find the fair value of a stock, and based on that, we're gonna have a bias if the stock is either overvalued, undervalued, or fair valued, and then we're gonna go to step two. And step two is going here to Market Chameleon and find a certain trade based on what we know the stock is, under, over, or fair value. That's my plan. That's my plan moving forward. If you're not a member of Market Chameleon, yes, I've partnered with them. Yes, I'm biased, but I have a subscription for 3 years before I've partnered with them. Something to consider if you are in the market for options, selling options for income. Usually, I don't use to Market Chameleon for just buy calls or buy puts. I use them to sell options and generate passive income. And you should do the same. And of course, a quick disclosure. Feel free to read all about it. Just so you know, this is all for entertainment purposes only, educational purposes only. It's not a financial advice. Feel free to read about Market Chameleon and all that stuff. I'm also switching to Tasty Works from Robinhood, just trying to get my life back to like basics but good, happy place, and talk about stocks, and that's what I liked. And just fame and all that nonsense got the better of me a few years back. We're gonna go back to this. We're gonna analyze stocks, and I want to show you the first one. I don't know if you guys remember my Excel, good old Excel, that I just put the ratio. So I'm gonna show you Nike. Okay, we're gonna do next week probably Apple, Nvidia, Tesla, AMD, all the like popular stocks to find the fair value based on the book, and then we're gonna go to Market Chameleon and see if we find any trades. But I've done one example I want to show you on Nike. Okay, the price today is 75.24. It's down like 20% this week post earnings. And when I put all the financials and all the stuff in the Excel, it took me a while. I got rusted. I was rusted, but I found how to do it again. It's just like muscle memory. So let me show you. Let me show you what I mean so you can have exactly like a better picture how we use Market Chameleon after we analyze the stock. So let's go back to the Excel. Okay, so this is the Excel, the good old Excel. We got Nike, okay, and I put all the information, all the data, all the stuff, and I got the price today, 75. And once I put all the info, the yellow is constant, the light blue is the info that we need to put, and I'm gonna show you those next week. We're gonna go back to basics of analyzing a stock. And we see for Nike, the price today is 75.25, and the stock fair value you see here, according to the book itself and the ratio that I put, 76.41. So we are exactly where Nike is traded fair value. Can they go up? Of course. Can they go down? Of course. But as of now, after a 20% drop, a lot of people are thinking, okay, is Nike like a buy? A screaming buy. I see all those articles on Motley Fool, Yahoo Finance, all that stuff. I don't know. It is fair value based on everything that I know. I could be wrong, but that's just based on what I know. And the price that I will be a specific buyer, okay, this is like 30 something percent cushion, is $50, 51.20. So if Nike ever goes down from 75 to $50, this is my time to, I won't buy the stock. I will probably buy Leaps for the next 2-3 years, and then I will probably hold Nike forever. That's like a forever stock that I always want to hold, but the goal is to hold it not at $100, which was like a week ago, 90 something, but to buy at 50. And if Nike goes to 50, that's a different story. But for this specific example, I know that Nike, as of now, based on everything that I know, is fairly valued. Again, you can do your own analysis, whatever. I'm sticking to the basics book from like 100 years ago, 70 years ago, something like that. I think it was in the 1960s that he wrote The Intelligent Investor. Again, I will read it again starting 2 days from now when it will be here. If the fair value is around around the price now, 76, 75, that means that I'm gonna go to Market Chameleon, which is step 2, starting next week. This is what we're gonna do. So now I have a bias that Nike is fair value. That's my bias. So I'm gonna go here and I'm gonna try to find something that I can actually make any income on. So we got Nike, we got top 3 by edge. Okay, so that's step 2. We got put call. I'm not dealing with that. Debit iron condor. That means that Nike needs to go either below 73 or above 78. I don't want to do that because I assume that they are fair value. So I assume as well that they will stay around 75. How long? No one knows. Let's change the top 3 by win rate and see what we got. This one sell the 81 and buy the 85. Could be, but you're only getting like $15. Sure, 91% win rate, but $15 to risk almost 400. You know, for 10 spreads, that's 150 for almost $4,000 minus the income. Not ideal. It's 91% win rate. You do you, but it's not for me. But this is something, okay, debit iron butterfly. This is also, they need to go down below, I think 72. I'm not doing this. I prefer to do the credit, not the debit. But we got here something nice, bull put spread. I like to do those put spreads. So I know now that Nike is $75, even though they dropped 20. And we got sell the 74 put and buy the 72 put. I'm not taking this trade. I'm just showing you what's next for us, what's next for this channel. We're gonna analyze the stock. We know the stock is either we know now that Nike is fairly valued based on the Intelligent Investor book and the ratios. I should probably do a detailed video of Nike and those ratios next week, but just in case, if you think this is something to as a strategy to move forward, then you assume that Nike will stay the same around 75. You can sell the 74, buy the 72 puts for like 2 weeks from now, July 19. Your max profit is above 74. Let's click and see what we got. So that's something to consider. So you're risking 200 minus, let's put the limit, let's say 0.4. So 40 bucks is your income. So 25%, yeah, 23 and a half. That's pretty good for 2 weeks. That's pretty good if it happens. Basically, so you're collecting 40 bucks, you're risking 160 or 400 for 1600 bucks on 10 credit lot, something like that, if you wish. On margin, it's half that. I'm not talking about margin, it's channel, it's your money, it's your choice. Okay, so we got Nike behavior, a lot of red, okay. And we got in here, this is the trade. We are already deep in the money. This is what I like to see. And I like to read here the break even is 73.62, which is negative minus 2.3%. So Nike needs to go down another 2.3% from the price today for you to just break even, not to even loss, for you to just break even. And your max loss is below 72. And if you assume that the formula is correct, the formula could be correct, but the timing could be wrong. Okay, it's not a science, it's an art. Keep that in mind. And we got things to consider, all that stuff, theoretical, all that stuff. But it's something to consider. If I know that Nike now is 75, fair value is 76, do you think it will be below 72 in 2 weeks and you will lose all the 1,600? Or do you think they will be above 74 and you will collect 25% in 2 weeks, which is pretty, that could move the needle if you do it over and over and over again. Again, just want to show you what's going on. I wish you all a happy 4th of July. Starting next week, we're going to go back to the roots. We're going to analyze stocks. We're going to do financials. And then the final piece of that puzzle, based on what we found, we will go to Market Chameleon and we will try to find a trade idea based on the bias that the stock is under, over, or fairly valued. That's at least what I'm thinking moving forward, but I'm happy to go back to analyze stocks based on simplicity that's in the market, and it's been profitable for Buffett and friends, as they say, in the last, 70 years or so, something like that. Either way, my name is Z Finance After 40. I'm happy to be back. I really am. Market Chameleon, 7 days free trial. Link in the description below. I'll see you next time. Yeah.